Traders, this is Cousin Vinny coming to you from theclosingprint.com on February 23rd, 2020. In this edition of your weekend video newsletter, we'll discuss the weakness in all of the indices last week, with the exception of the London Stock Exchange and the FTSE. All the FANG stocks were lower with the exception of Nvidia. Nvidia and Netflix fared the best. Apple is below the 21-day. We'll discuss those stocks in addition to Tesla, which was up 12.62% for the week. Bond stock ratio is showing a bullish tendency towards bonds and away from equities in the short term. HYG and junk are neutral but hanging out near the highs. In addition, we see caution for the Dow Jones Composite fading back to the 21-day and the S&P 1500 histogram fading as well towards the zero line. XII did produce one red stick. That's a caution signal. If we see another red stick on Monday, that would be a sell signal confirmation. Tick and TIC-Q are both trending lower on the 60-minute time frame. They spiked to the downside late Friday. NYMO and NAMO continue a bearish cycle. They're at lows and could turn up. Breath thrusts are at zero. Those faded as well. And the NYHL, new highs minus new lows, still in a bullish cycle above the zero line, but fading slightly. And the NYAD advanced decline is in the red zone. The S&P equal weight index did show us a double top last week. That's fading back to the 21-day as of Friday. The put call ratio did see a spike. That's into the bullish zone, so we could see a push a bit higher in both VIX and the put call ratio to give us a fade the fear trade setup to the long side. VIX is giving us a bearish signal on the 60-minute. That's red, very near that 20 zone that we've been looking for over the past week. Bullish percent is at 62, and skew did spike up to 142, faded back to 135. That's showing institutions are hedging a bit more and buying out of the money puts. US dollar did spike but faded on Friday back to 99.19, with the yen dropping dramatically last week on the bearish effects of the coronavirus in Japan, in addition to what we saw on the Nikkei, off 1.27% for the week. Bonds were all higher last week but did fade on Friday. The 10-year yield is bearish for yields. That continues to move lower. Gold broke out. That's trading at highs. Congratulations if you traded that. Copper is showing higher highs and higher lows. That's still bullish. And West Texas crude did see a bearish drop. Bounced a little bit last week, but did fade towards the end of the week. The heat map is improving, but really shows no change, while most sectors faded back to the 20-day moving average. The heat map also no change on the international side, with South Korea and China fading on the week, with USMCA having a positive effect on Canada. That continues its bullish trend, while Mexico did fade. We'll look at some IBD 50 names that are showing potential for a bounce. Those all pulled back, most of them at the 21-day, looking for a bounce to start the week, maybe a little bit lower. We'll also look at some MarketSmith Growth 250 showing relative strength while the market was moving lower. These stocks were moving higher. In addition to stocks, the top 20 volume percent gainers in green. Polkowski had 5 of 5 green last week with a CPI signal mixed since Friday, moving from 65.7% to 20%, with 24 bearish patterns, 6 bullish patterns, and 264 patterns waiting for breakout. Once again this week, we are cautiously bullish to neutral to start the week. We want to see how things start off, and we'll reassess on Monday morning. Starting off with the Arca Institutional Index, we did see one red stick last week. We pulled back to the 21-day moving average. The 50-day is still trending just below price action. The markets are bullish. The catalysts did affect the markets, so we did pull back on Thursday and Friday. Looking for a bounce here with CCI, stochastic RSI, at the lows and oversold with MACD crossing. These 75 stocks that are most commonly held in institutions' core portfolios is giving us a glimpse into what institutions are actually doing. So if we see another red stick on Monday, that would be more of a sell signal and a reason to take more swing positions off. So we'll keep an eye on XII this week just to get an idea of what institutions want to do going forward into the seasonally strongest months of the year. The S&P 1500 is also on a buy signal. However, with histogram fading over the last 2 days, Thursday and Friday, if this drops down below zero, that would be a caution signal and reason to take more profits off the table. Trade fewer swings and day trade only if you need to. Spiders, of course, pull back. There is potential that this could be at the A point a left shoulder, the B point a head, neckline down here at 382 Fibonacci level, 320 give or take. If we do head back towards that zone, look for this channel potentially to develop. Maybe we hit the 50-day moving average like we did back here 3 weeks ago and bounce into this descending channel. We'll have to gauge this upper trend line at some point over the next couple of weeks to see how this plays out. With RSI continuing to drop and MACD crossing, I would think we're probably going to test the 21-day again on Monday to start the week, as the markets still trade near all-time highs. The S&P 500 and in this case the NASDAQ 100 both created spinning tops, medium-sized candles inside of the previous week's price action. While this isn't a reason to get too concerned, we are expecting a pullback in big cap tech stocks as well. Some of them fared better than others. The Google is at the 21-day, and we did have Netflix and Nvidia trading above their 9 EMA. Relative strength versus what we saw in Apple, as an example. Both Apple and Facebook are below their 21-day moving average, potentially pointing to those NASDAQ stocks pulling back this week. If that should occur, then look for the NASDAQ to be a bit lower. As MACD begins to flatten out a bit, it's still showing bullish momentum, could continue. So we'll have to wait and see what happens on Monday and Tuesday, and then reassess. For the most part, this is a very bullish chart with a little bit of consolidation of the recent gains. That said, most of you noticed that the small caps held up very well above the 21-day moving average. The performance of the IWM outdistanced that of the NASDAQ, the S&P 500, the Dow Industrials, and the New York Stock Exchange, posting the best performance for the week. As long as we stay above the 21-day, I'm looking for potential for a bounce, though we'll have to watch what happens on Monday. MACD is turning. Volume did increase on Thursday and Friday. So there is a potential that this could drop off a bit and retest these previous lows. The New York Stock Exchange high-low NYHL does show more new highs than new lows as this continues to stay above the zero line. The moving average is peaking, starting to round a little bit, though we do not have a sell signal until we get down below the zero line. We did in May, August, and September. So monitor this particular chart as well, as this is still giving us more of a bullish than bearish look, even though we did have a red stick on Friday, showing potential for this double top or lower high to retest some of these lows going into the last week of February into March. VIX 60-minute signal is red to start the week, as the daily has potential to spike a bit further. If we do get up into the 20 zone in the short term, 20 to 25, that would be an area where we'd want to look for a fade over the following week. As we've seen in the past, a spike into this zone typically reverses within 5 trading days, and we would look for the same thing to happen into the seasonally strongest months of the year once again, if that were to occur. And finally, we saw a skew spike to the 141 zone last week. On Wednesday, I believe Doc mentioned it as well in the trading room. that he was looking for some weakness going into Thursday and Friday. That was a good call. As long as it stays above 135, this is showing institutions favor hedging with out-of-the-money puts more so than they were back here in October when this recent rally started. So it's no surprise that we're trading right near the 21-day moving average. We pulled back to it. Institutions are hedging, and we're going to keep an eye on this on Monday and Tuesday to see how we might trade the markets going forward. Do we hedge more, or do we unwind some of the hedges we started last week? We also saw breadth deteriorating somewhat as the markets potentially could come back to the 50-day moving average up here in the top panel. S&P 500 advanced decline percent is back to zero, fading. This could be viewed either way. If we start to see more weakness, that would obviously point to potential for a pullback to the 50-day. We are anticipating that could happen. Conversely, if we do see some strength, a bounce off of this area means that we have plenty of strength. We're not overbought. We're not exhausted above the plus 30% level. So any bounce this week could follow through and see more upside potential, though we do anticipate that we're probably going to see weakness on Monday and Tuesday to start the week, with mid caps, small caps, and the NASDAQ 100 in the bottom all showing a very similar deterioration in breadth. The bond stock ratio shows a bounce, a double bottom, if you will. The 65 period moving average, the blue line, is still turning downward, so the longer term trend is still bullish for equities. Short term, it's showing a potential for additional funds to be flowing into bonds in the short term. As strength in TLT, the 20-year bond, continues, we did see a shooting star on Friday, so it's possible that bonds could come in a bit, retest these highs, or the 20 period, or this price action back down here at 146. So if you do have TLT, congratulations, that was a nice trade off of the 20 period last week. AGG, the Barclays Aggregate Bond Fund, did show strength breaking out on Thursday, following through on this bullish trend. We do have a position in the Barclays Aggregate Bond Fund. This is what institutions use as their benchmark. MACD is turning higher and stochastics in the red zone. While we did see strength in bonds, high yield corporate bond yields also stayed near highs, in addition to what we saw on junk bonds. So until these turn over and start leading us to the downside like we had back in September, October into December in 2018, this is telling us and sending us a conflicting signal that risk appetite is still fairly high, as we saw with the IWM small caps as well, holding up last week and outperforming the big cap indices. This is also giving us a bullish signal as HYG and junk bonds remain at highs. The British pound US dollar pair also showed the continuation of this descending wedge pattern, which had a positive effect on the FTSE and the London Stock Exchange, which both remain in a weekly bullish pattern, having broken out of this basing pattern back in December into January, and now we're starting to see the London Stock Exchange and the FTSE continue on that weekly trend, remaining above the short-term moving averages. At the same time, we did see continued strength in the US dollar. This is the safety trade playing out more than anything else, as we saw strength in gold as well, breaking above this level at 1613 that we were targeting last week. Following through, this safety trade is a bit overbought now. I would expect that some traders are going to get stuck in this if we do see a reversal in the short term. For now, though, we're remaining in this bullish trend. So if you're in gold, I would just be watching it from day to day and taking profits if we start to see some wicky reversal candles at highs as we resume trading. In addition, we saw copper making higher highs and higher lows. It did fade a little bit last week. However, we did see wicks below each of these candles, so buyers have been stepping up right near that 258 zone, looking for a higher high and volume to continue. MACD's above its signal line and trending. All of this happening while West Texas crude and Brent continue that bullish reversion back towards the mean on the weekly time frame, having dropped 25% in the preceding 6 weeks. For the past 2 weeks, we've moved higher on above average volume, and MACD's turning should cross over, so I'm thinking at a minimum we should see a test of the middle of the Bollinger Bands over the next couple of weeks. This, of course, would be bullish for equities, as this has a positive correlation to the equity markets. For the most part, spider sectors have stayed pretty much the same as last week. International markets look pretty much the same as last week as well, with weakness in China and in South Korea and the Southeast Asia countries. Real estate shares did fairly well, closing near the highs on the weekly time frame. Transports hanging out above the 20 and the 50-day. Below these previous highs, RSI is above 50, so it's looking okay. We need that to continue. Materials improved over the last 2 weeks. Communications sector, Netflix, Facebook, Charter Communications, Disney, all weighing on this particular industry group, did pull back a little bit last week, but still in a bullish trend. Energy faring the worst, lagging. Financials at highs, still in a bullish trend, RSI is above 50. Industrials, same idea, bullish trend, RSI above 50. Technology also doing quite well, despite the selling that we saw on Thursday, Friday. We are in a bullish trend at highs. Consumer staples, same here, with RSI above 70 for the week. Utilities also at the highs as well, in addition to healthcare and consumer discretionary. So the markets don't look that bad to start the week. And the XLY XLP ratio is also starting to turn up, which is a bullish signal. You can see back here in December of 2018 into January 2019, this is where the markets reversed, started moving higher after that 20% downside move. We've been fading for the most part over the last 3 or 4 months, moving sideways. Now we're starting to see the shorter term moving averages turning up. This is bullish for equities if this continues. Stocks like Adobe on the list, what we're looking at is price action that's pulled back to the 21-day, potentially has an opportunity to bounce, so we'll keep our options open. Depending on how price action reacts at the 21-day on Monday, we do have a MACD cross. Same thing with applied materials, could bounce at the 21-day, RSI turn back up, MACD turn back up as well. Advanced micro, a little bit more selling, but could see a bounce. BlackRock giving us an opportunity, pulling back to the 21-day like it did here back in the beginning of February, which led to that nice bullish move. RSI pulling back. Look for a bounce at the 21-day on Monday or Tuesday. A lot of the pharmaceutical stocks like Bristol Myers looks good, bouncing. We did see something similar on Eli Lilly last week. We started a position in Lilly looking for a follow-through on this bounce. Brown and Brown flagging at highs, showing relative strength. CB Richard Ellis, CBRE, that's showing you that relative strength we saw in real estate and REIT stocks last week. Looking for a bounce here. Buyers did step up at the low of the day on Friday. Watching for a follow through in the builders as well. DHI has been on the watch list for the last few weeks. New Oriental Education, tutoring, Chinese stock looking for a bounce at the 21-day. Nice little candle on Friday. Look for a follow through day on Monday. Franco-Nevada, been on the watch list for the last few weeks. That continues to move higher with gold. One of the stronger stocks in the group. In addition to Newmont Mining, which I believe Mikey took a position in last week, blasting higher. Google looking like it's going to bounce at the 21-day. Look for weakness. If it does pull back, it could find support in this zone prior to the recent earnings. Global payments with the potential for a bounce at the 9 EMA and the 21-day. Health equity back on the list showing strength. Look for a little flag potentially and then a follow through. If it doesn't pull back this week, that's showing relative strength. MACD's above its signal line and volume has been increasing. Lulu and retail stocks have been doing fairly well. Looking for a bounce at the 21-day if it does pull back, or for the 9 EMA to hold, look for a follow-through day. If we do see strength on Monday, MACD is above its signal line and volume has been increasing. RSI is above 50. MasterCard has been pretty strong, holding back at the 9 EMA, looking for a bounce. 2 days of wicks. Buyers at the lows look for a bounce on Monday. Microsoft pulled all the way back to the 21-day. That's potential for a bounce. We did get a MACD cross, so keep an eye on this. If it does pull back, look for a potential move back to these previous areas of consolidation in this zone. Netflix also showing strength, pulling back to the 9 EMA, holding above the 21-day, different from what we saw on Apple, which closed below the 21-day, showing potential for RSI to continue dropping. We did see distribution in these two volume bars here, as well as MACD dropping potentially for a pullback to what might be a support zone here at 382 and 236 Fibonacci levels and previous lows that we saw back in late January. ServiceNow bouncing at the 21-day, could see a follow-through day on Monday. NVIDIA looking for a bounce at the 9 EMA. RSI is above 50, pegged at the highs, as well as MACD above its signal line, rising. Looking for a potential bounce this week. PLMR also we've noticed recently with price action bouncing at the 9 EMA. MACD above its signal line and RSI above 50. Planet Fitness continues its bullish trend, spending most of its time above the 9 EMA. Only one test of the 21-day prior to this one at the beginning of January. Regeneron showed a lot of strength last week as well, flagging to the 9 EMA. Bullish on Friday, looking for a follow-through day and breakout with MACD above its signal line and volume increasing, RSI above 50. SolarEdge also outperforming last week, Wednesday, Thursday, Friday. Looking for a flag now. Above average volume on the breakout, MACD above its signal line, RSI is pegged. If we do see a flag, there is potential for that to continue to move higher. Square, along with other payment processors like MasterCard and PayPal, holding up fairly well above the 9 EMA. Spirit Realty, another REIT and real estate stock showing relative strength last week, holding near the highs. Looking for a breakout. RSI still above 50, and MACD's trying to turn back up as a function of price. Just need to see more volume. Stoneco's trying to bounce, holding at the 9 EMA, 21-day, along with T. Rowe Price, which pulled back to this breakout zone and the 21-day moving average. Looking for a bounce. Buyers did step up at the end of the day on Friday. So let's wait and see on Monday if this was just shorts covering at the low or whether or not we can see a bounce and a follow-through on Monday and Tuesday. MACD's still trending a bit lower. Tradeweb markets on the IBD 50 for a few weeks now. This one continues this breakout that we looked at last week and the week before, with MACD above its signal line and volume increasing. Vertex Pharmaceuticals, along with Bristol Myers Squibb and Eli Lilly, these pharmaceutical names look really good. Johnson & Johnson also bounced. Keep an eye on that one. I believe a few of you were trading Johnson & Johnson last week. Robert Kaplan, I think, was trading it on Friday, looking for a push back above the 21-day, and then a follow-through in a test of 154.50 with RSI rising and MACD turning with volume increasing on Friday. And finally, we have XP, which did show strength at the end of the day on Friday, closed back up into the upper half of its daily range. Looking for this to follow through at some point and break out above this level, depending on what the indices do, of course, to start this week, Monday and Tuesday, into the seasonally strongest months of the year, March and April. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on February the 23rd, 2020, with your weekend video newsletter. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Make sure to check out some of these additional names. Market Smith Growth 250 relative strength names, in addition to the stocks in green, the top 20 volume percent gainers to start the week. Remember, we're cautiously bullish to neutral, and we'll reassess the market once we see what institutions want to do to start the week. I hope this helps. Take care, and we'll talk to you soon.